Yo, what's up, guys? First video on market reviews. Um, every now and then I'm gonna be putting my review of the day on my trades for the day because I want you guys to see how I actually trade, how I do my markups, how I see the market, and you guys can take that to your advantage if you want to. Use it as a tool. Get someone else's insight of maybe what you have saw that day. So today I had traded ES today, S&P 500 futures. Traded minis today. So let's start from the weekly time frame. So from the weekly time frame coming up to over here, we do have this weekly fair value gap. This BISI fair value gap is also in line with this volume imbalance, which I can see is a very high probability draw on liquidity. So because of that, we are looking on the weekly for some bullish gaps that to see if they have been rejected, any PD arrays. So we're looking at order blocks, breaker blocks, and fair value gaps. So right here we got this gap right here. First gap, this first PD array right here. It had been ran through and disrespected. Next thing we're looking at is these two down close candles. So if we think about institutional order flow, we think about if we are in a bearish market, we want to see price run through those down close candles, and if we are in a bullish market, we want to see it reject those down close candles and respect it, acting as real support and resistance. So if when you think about institutional order flow, you want to pay attention to these down close candles, and you want them to, if depending on your bias, depending on where the draw on liquidity is, you want to pay attention to that on being respected or disrespected. Now moving over to the daily time frame, we still have this weekly fair value gap and volume imbalance. This is our main draw on liquidity and has been my draw on liquidity for the past, I would say, 4 weeks already. But coming down to the daily time frame, we got the same down close candles, but now we can take a look at what's above here. And above here, we do have this volume imbalance right here, which is not only this volume imbalance, but if it was a day before, this would have been our new week opening gap, but it is not. So this is just a volume imbalance. It is a bearish volume imbalance, and this is not a fair value gap. This is not a liquidity void. Those are two totally different things. This is a volume imbalance, which is a gap in price. It is a gap in where price had opened and closed at. Now, with this volume imbalance, this could be acting as a target or as support, as resistance. Now, support and resistance does not exist. Why? Because there are stops, there are sell stops and buy stops sitting right below these lows and highs. So we always want to pay attention to that, and we don't want to trade based off of lows and highs. We want to pay attention to what institutional order flow is doing and what order flow is doing. And right now we can see that order flow is drawing towards this drawn liquidity. Why? Because in the past, I would say the past month, we had, or maybe a couple weeks or so, we had this down move, this full leg in price coming down. And what we can see from that is when price had come down, it had made this volume imbalance right here. In that volume imbalance, it had also came down and disrespected this down close candle, this bullish BISI, this bullish BISI, and these three down close candles. It had disrespected all of that. Now, when we pay attention to institutional order flow, when we think of smart money, we want to trade not the same as them, but we want to trade in the same direction as them, because they are the market makers. They are moving the market. They are making price go towards these different values based off of them pulling out liquidity and putting liquidity back into the market where they want it to go. So the number one thing we want to pay attention to that involves smart money is displacement. When we have displacement, this means that smart money is involved in this trade. And displacement can be on the daily, It can be on the 1 hour, the 15 minute, the 1 minute. It can be on any time frame, but we want to pay attention to where displacement is. And if we have displacement, that is our sign that smart money is involved in this trade. It is involved in this move down or up. So looking at these down close candles, we get the disrespect right here. Boom, right here we get the disrespect. Now we want to see price have displacement over the low. Do we get it? Yes, we do. Now the next target that we want to look for is these down close candles. Does it disrespect or respect it? Price came down, it had disrespected it, but also there was no displacement over the low. There was just a wick close, so this is failed displacement, or also known as a liquidity sweep. So in this liquidity sweep, we are looking for price to come back up and retrace into something to come back even lower. So first, price had retraced back up into this daily order block, this daily bearish order block. So price came back down and tapped back into what? If we come to the 4 hour time frame, price came up, tapped into that order block, that daily order block, and then what did price do once it came back down? It had displaced below this low, and then what did it do? It started to come back up and then tapped back into what? To go even higher. It tapped back into a bullish order block. Now what makes this a valid order block? Number one, if we come to the 4 hour time frame, what makes it a valid order block is, number one, we need displacement. We need displacement over a high. Do we get that? Yes. Second thing, we need a fair value gap to make it high probability. We have a gap right here. And it also filled and rejected. So because of that, we have a valid order block right here. It already tapped into 1 time, 2 times, 3 times, and finally 4 times to go even higher. So because of that, price had swept sell side liquidity, came back up, tapped into a bearish order block, came back down, tapped back into this bullish order block to push even higher into, now what we have is an unmitigated or a mitigated 4 hour fair value gap. Now in this 4 hour fair value gap, we have a fill already. It had been filled already. It's been mitigated. But because of that, it's not tapping into the 4 hour fair value gap. That's not what we need to pay attention to. What is it actually doing? It's actually sweeping this liquidity right here. It's sweeping these buy stops right here that are above here. It's sweeping the buyers out of this equation. It's sweeping all this liquidity that's above this high to push price lower now. Because what is our main draw on liquidity again? It is this weekly fair value gap BISI and this weekly volume imbalance push into together to make a very high probability draw on liquidity, which will push price even lower. Now in this, we had this bullish buy side liquidity sweep. Now in that, dropping down to the 1 hour time frame, we can see that price had came up, mitigated this order block, this bearish order block on the 1 hour, and this is on yesterday on Monday. So because of that, price came down, created a sell side fair value gap or a SIBI, came up, filled price to consequent encroachment, which is 50% of the fair value gap, pushed price even lower now. Now coming down to the 15-minute time frame, this is where we want to look at what I was looking at today. So at the beginning of London session, I marked out the Asian range, seeing what liquidity was available there. Now, in the Asian range, there was this unmitigated fair value gap right here on the 15-minute, and had this unmitigated POI of this bearish order block, both unmitigated. So what I was anticipating was at London Open at 2 o'clock, I did want to see a jump above open price to maybe tag into this fair value gap, which I did have a limit order set. I did as well. But because of that, I did not get a tag in, so I had removed that limit order and just waited for some type of entry upon coming into Silver Bull Hour, which is 3 to 4 a.m. New York Standard Time or Eastern Standard Time. So coming back into this, so between 3 to 4 a.m., so from here all the way to here, what we want to see with that is we want to see some type of entry upon having some type of liquidity being swept, displacement, and a fair value gap. Now, the silver bullet is not a setup. It is not some type of setup that needs to be done every single time in these time intervals. It is a 60-minute time interval every day that involves time and price towards the draw on liquidity. What is the most likely draw on liquidity of price? And in that, it can be either buy stops, sell stops, buy side liquidity, sell side liquidity, a 2022 model setup, a breaker, an order block, just any unmitigated liquidity. That will be the draw on liquidity. So finding our higher time frame narrative of the higher time frame draw on liquidity will help us with our silver bullet setups. Now, if we look above us, we do not have any unmitigated points of interest or draws on liquidity besides this fair value gap. This would be the only draw on liquidity that's unmitigated, and it had already been ran past already. It's long gone and forgotten. So since it's trading down already, we can focus on whether price is going to push towards our original draw on liquidity. So in this, I had spotted a high being formed right here. Now in this high being formed, right after it had been formed, price had dropped down and it had swept this liquidity right above it. So this is a buy side liquidity sweep. Now, next thing I wanted to look for was some type of displacement over a low, below a low. So we saw this and then it came right back up. So I considered this a sweep at first. But because of that, price had came back down, displaced over that low. But because the first candle had a wick, I know some people don't count this as displacement. I did not count it as displacement. So what I wanted price to come down and break past this wick now, which it did. And because of that, we had a buy side liquidity sweep and we had a sell side break of market structure or a breaker structure. And with that breaker structure, we had displacement over it. How do we know it's displacement? We had a body close over this wick. So because of that, we had a sweep, displacement. Last thing we needed was a fair value gap lining up with our draw on liquidity. Where did we get that? Right here. Now in this draw, in this SIBI fair value gap, price had came down, displaced, came back up, and it had filled it with just a wick, just one wick. We did not get a second entry on that gap. It was one entry, and that was the only entry we were gonna get, and that is a solid entry right there. I had a limit order set right here, right at the tip of the gap, stops right above the candle's wick. Reason it's not above the second candle's wick is because if price had came up and it pushed past this candle and it closed over it, then this would be a disrespect of the candle and disrespect of the gap, and this fair value gap would not be valid anymore. When you have a body close over the gap, that would be a disrespect of it, and we would be pushing for higher prices after that. It did not. It had wicked it and it came right back down. It's because of that we can anticipate lower prices. I had my TB set right at 1 to 4s, right there. Obviously price had pushed up a little bit more, but we can anticipate because price is gonna go towards this silver bullet. Towards the draw on liquidity. We can use the silver bullet to our advantage and take a little bit of a scalp off. Now, the draw on liquidity must be 10 handles or more. Obviously, that draw on liquidity is 10 handles, but your TPs should be at 5 handles, at least 5 handles. So when you got a 5 handle TP at least, now this is 6 handles, about almost 7 handles. When you have a 5 handle TP, that is more than enough to, get by. You make $250 from 5 handles. Right here. This is 5 handles right here. That is not a lot. 5 handles is super easy. You make $250 in one trade. You don't have to trade the rest of the week. That's amazing. As ICT said himself, if you make $250 a week, you got 5 weeks in a month. That's $1,000 a month you can save. So if you think about it, that's $1,000 a month extra that you can make by just having that small move right there. So from here to here, super simple, $250 every week. You can do this one time a week and you will make $250. So anyways, tagged into the trade, push back down, creating another fair value gap. Market came back up into this fractal, tapping in with consequent encroachment right here. And as we can see, we had not just this gap, but we also had a BPR right here. So we had a BPR is two fair value gaps that are lined up with each other. So we got this BPR right here. And because of this push past this bullish fair value gap, this BISI, it is a disrespect of the BISI, which order flow intends that it is a bearish market. Now in this, we can see that consequent encroachment had been tagged into this fair value gap by going 50%. Now coming back down into this low, making contact with this low, there was a big push down with displacement. So pushing down with displacement shows that, number one, smart money is involved. Number two, we should be looking for lower prices. Now in this, I had TP set at pretty much right here. Didn't do anything more than that, but this was how my trade went this morning. It's about 4:36 a.m. in the morning right now. That's pretty much it.